and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Marlon Sanchez, founder and CEO of Skyway Pacific Research and Capital Management, a Hong Kong-based manager that invests in Asia-Pacific alternative investment strategies. Today, Marlon will share with us his outlook for his investment strategy, including the greatest opportunities, challenges, how the firm addresses ESG, and more. Before we dive into the conversation with Marlon, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Marlon. Thank you so much for being with me today.
Alana, thanks so much for having me.
Absolutely, Marlon. So to kick off the conversation, tell us a little about yourself, your firm, and how you got to where you are today.
Sure. I'm very happy to. I might start from the early innings, Alana. I'm from St. Petersburg, Florida. Grew up there and finished at Morehouse College in 1994. I had aspirations to move into capital markets at a very young age. I'll tell you honestly, I saw trading places when I was in sixth grade. I didn't know exactly what they were doing, but I knew that I was really excited about capital markets. I spent time with local brokers in St. Petersburg. I looked for internships when I got to college. I wound up interning at Morgan Stanley in 1993 summer in corporate finance. Spent some time doing bond deals that summer, and time on the fixed income floor just convinced me that I wanted to be on the trading floor for my career. So I wound up doing that for the majority of my professional career in investment banking. I started in debt capital markets. I moved to equity capital markets in Hong Kong. And I started looking at the globe in terms of capital market opportunities at a pretty young age. Wound up lucky enough to go to business school in Pennsylvania at the Wharton School. Finished in 2000. I worked at a few banks thereafter in London and in Hong Kong, but really found Hong Kong to be home to a large degree for my what would become specialty Asian capital markets, and particularly emerging capital markets within that. That's really the sort of foundation of my professional career. I would say that where we are now, I've been in Hong Kong for about 25 years. Within that time, I'm one of the few people in the equities division that would have spent a lot of time on optionality, particularly when it comes to convertible bonds. My career in equity started in capital market syndication, where I did convertibles back in the 90s. But it was something that helped in the way of discussing market opportunities with hedge funds, because the intrinsic value became a language we all shared. And it definitely gave me reason to speak to more alternative managers versus the classic and traditional. So what I did for the majority of my career in distribution was focus on hedge funds. And so here in 2022, just a few years ago, as I was leaving Deutsche Bank, where I spent 15 years across numerous capital market businesses, from execution to prime brokerage, we come into a period where I started my own business. And that business was predicated on the idea that I knew the region of Asia fairly well, and certainly several generations of alternatives managers. If you think about it, the convertible arbitrage strategy is what gives birth to the vast majority of hedge fund or alternatives in liquid markets starting in 2000, 2002. Around that time, if you knew the convertible bond space, it gave you a great deal of reason to interact with hedge fund managers. So that gives me 25 years of covering hedge funds and gave me a good bit of perspective in terms of starting a business based on hedge fund research. So my business partner and I, Chris Nash, we started looking at the hedge fund space as a consultant to allocators who couldn't get to Asia, to be quite frank, during COVID. And certainly with that, we started to build a few bridges with strategic partners in that space. And we were able to make a real difference at a time where there was certainly less transparency in terms of the opportunity set. And lo and behold, having someone on the ground in Asia wound up being a real asset to a few allocators. We forged some very good relationships, and they're now the hallmark of Skyway Pacific. We call ourselves research and capital management because research is first. What we've done over the last 3 years is build a library of hedge fund profiles, investor due diligence, operational due diligence. And today, I think we serve as one of the more active consultants focused on Asia. We're in the middle now of moving from focusing purely on hedge funds, as well as now providing perspective across the capital market spectrum from private equity into private credit as well. And I'll say just one thing there, as I talk about the origins of the business and where we are today, I think that globally, coming out of COVID, what you have is a real commonality for the average investor is moving from less liquid opportunities to more liquid. The venture capital successes of the last 15 years came to a relative halt during the COVID period. And certainly the mark-to-market ability of some of these investors to really understand their net worth on the day was indeed impaired. You see many more family offices and junior institutions moving from the venture capital focus into private equity, from private equity then into more liquid alternatives like hedge funds. And so we think the timing couldn't be better in terms of looking not only at the hedge fund space in general, but certainly doing so in Asia Pacific.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper. Let's get you ready.
Marlon, given your focus on the APAC region and alternatives, I would love to hear your high-level outlook for the space.
Absolutely. And I think where we are now is the environment is volatile. We have geopolitical risk, we have market risk, we have individual portfolio risk, and all working together in a fashion that many of us have not seen, even if you had a 25-year career in capital markets. Some of the moves as recently as just this April show you that diversified strategies are the way to play capital markets, generally speaking. Hedged strategies, hedged portfolios now provide you a level of defense and downside protection, and if done properly, allow you to benefit from the dispersion that happens in more volatile circumstances. So we think that the opportunity set in Asia is particularly interesting because what Asia does with 13 different markets and 8 very real currencies is it gives you an abundance of both those elements. Again, volatility and dispersion. So what we look to do is advise allocators on how and where to find strategies that benefit primarily from those two elements. And in that, we've become relative specialists ourselves in arbitrage. So with that, I mean relative value, event arbitrage, risk arbitrage, and definitely convertible arbitrage. All 4 of which are done very well in Asia Pacific and wind up giving investors a very pronounced opportunity set for uncorrelated gains in pretty robust fashion over time. So if you look at the performance that we've seen year to date, despite the volatility in markets, despite the underperformance of overall indices, hedge funds have actually wound up performing relatively well across equity, long, short, certainly across credit, and particularly, as I said, across multi-strategy arbitrage funds. We see a consistent theme that the more volatile the circumstances, the better off you are having parked in a hedged strategy. And certainly that's been proven year to date in Asia Pacific.
Marlon, on the other hand, what are some of the greatest challenges you face in your space and why?
Well, I think challenges in investing, there are a lot of commonalities in terms of those challenges. So I'll take a step back, Elana, and just say the first investment is the investment in people. And that is inherently challenging because as predictable as we'd like to think we are, or as transparent as we try to be as people, there are changes and there are circumstances. So you have to know and understand the human aspects of what you're doing as an investor in alternatives. Who is managing my money ultimately? What's the fabric of the team managing my money? Is there a level of cohesive, is there an adhesive they share? Is there a culture among them that keeps them together? While the industry grows and becomes more diverse, each hedge fund team, one of the biggest challenges for them is the fact that their talent can be bid away so quickly. Growing a business in emerging markets particularly, but growing a business now, the focus on talent, the focus on team culture, creating that, preserving that, prioritizing that is probably the biggest challenge in finding the right hedge fund investments. And so what I would say in terms of overall challenges, I think that requires a great deal of time spent with key decision makers in each of those circumstances. So the challenge is not only the fact that the investment in people is paramount, but the time spent to make sure that you're making the right decisions in terms of time allocated as well as monies allocated winds up being, I think, inherently the set of your greatest challenges across the board.
Marlon, to shift gears a bit, ESG has been an important topic for the investment management industry, and I would highly welcome your thoughts on this.
It definitely is a very popular topic. We work a great deal with allocators out of Europe where ESG is actually quite paramount. We do advise on ESG investments in that sense. We talk to hedge funds about their ESG policy and an understanding of their portfolio makeup, looking to steer those who prioritize that ESG policy, steering them away from investments in coal, in controversial weapons, in palm oil, all of these different aspects that are covered generally in ESG. It is certainly a language we consider ourselves relatively fluent in. I think, though, we would not describe ourselves as an ESG fund in that sense. We would say that certainly all things sustainability for us are very important. And by that, we do as well think that the sustainability hinges on concepts like diversity, equity, and inclusion. We look for teams who prioritize that. And I think in 2025, if you are managing a hedge fund, but you do not have in your remit a very pronounced understanding of building a team where diversity is important, it can be diversity of thoughts for sure, but we would like to see an effort in the way of CIOs and business owners to leverage the inherent upside of gender diversity, cultural diversity, ethnic diversity, diversity of nationalities. This leads to greater innovation over time. We're quite confident that it will continue to be important in decision-making and finding yourself on the right side of alpha attribution, alpha creation when it comes to investment managers. So that's how I would describe our stance on ESG. It's much more the sustainability. When we look at teams, team orientation, and culture building, the fashion in which managers are doing so is indeed sustainable based on those principles.
Marlon, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
I think that you're right. We have covered a lot of ground. I would say we think that the future is in diversification, finding a better balance between diversification and concentration as you make investment decisions. We would welcome an audience with any investors looking at alternatives in the region, any investors who would like to explore the idea of portfolio construction. We think that applying a real portfolio theory to your stable of hedge fund investments will allow for robust, uncorrelated gains over time. We have a great deal to say for ourselves in that space in terms of our own offering, let alone how to advise allocators and investors on how best to use the dispersion and volatility that I've spoken about so much today to your advantage. So rather than run from the volatility created by geopolitics, currency fluctuations, and the like, embrace that volatility. Look for the managers that actually benefit most when markets are most volatile, that have a proven set of ingredients, a strategy, and process that winds up benefiting when there's more dispersion across asset classes. That is our specialty and certainly the way that we think investors should look at Asia Pacific. We're particularly excited about the forward for Asia Pacific in the coming years. Japan, China, and India leading in that sense, with each of those currencies now the top three in the three of the top 5 economies in the world near term based in Asia Pacific will wind up giving investors a great deal of springboard towards better performance in their portfolios.
Marlon, I want to thank you so much for sharing your perspective with our listeners.
It is my pleasure. Thanks, Elana. And I look forward to the next occasion. We'll have to do this in person sometime.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.